guys. Thanks for joining. We have a big group today. This is great. Let's get started. Okay, so today I'm going to be talking about not 3, but 4 strategies that I trade now day in, day out. And towards the end of the session, I'll be talking about breaking barriers that lead to trading success. So stay with me to the end. There's a lot to cover today. Added a lot of slides for futures. We want to get through that really well so that you have a good understanding of that. And this may change your trading life forever. All right, so let's give it a go here. All right, so what are we going to be talking about today and what can we expect? So basically, I'm going to be showing you how you can make consistent returns monthly based on margin capital and using high probability trades. And these returns you want to make month after month, okay? And that's really the goal here, okay? So what are you going to learn? You want to select the right option credit spreads before the market opens. That's 0 DTE. How to enter and exit your trades. How to prevent large losses, extremely important. And have a general understanding of when not to trade. And also how to trade consistently profitable, right? So you want to stay with me to the end. I have a special bonus, okay? And so hang in there, and I'm going to try to get through this within the hour, all right? I'm going to try my best. Okay, so you want to try to turn off all your distractions. You want to focus in, and you want to take notes, okay? Because there's going to be a lot of information covered, and even though we will be sharing the replay afterwards, and I guarantee you're going to want to listen to it over and over again in certain areas, right? So you want to cover, you want to make sure you have no distractions, take some notes, and save your questions till the end so I can get through the whole thing, right? I've done it with taking questions in the middle, and it really prolongs it. So I'm gonna wait until the very end to answer questions, and I will answer all of your questions that you have. All right. So the question is here now, why are you here, right? So I think I put down 3 reasons why you may be here, and I can tell you beforehand that I've gone through all 3, right? So the first one is you're interested in learning new strategies that'll take your trading performance to the next level, and you want to leave that career. Can you all hear me? Okay, just want to make sure. No sound. Yes. Yes. Okay. Yes, we have sound. Thank you. All right. And you finally want to leave that 9-to-5 career behind. I did it. You can do it too. All right. Okay. So reason number 2, you've seen, heard about, read about others making money trading. You know you can do it too, but you're just not seeing your account grow fast enough based on your goals. That's number 2. Number 3 is you've tried different strategies before. You thought, okay, this is it, only to discover that getting to that place of consistency isn't there, right? So you're not getting those consistent returns. So out of those 3, which ones, just so I know you're out there, which ones fit you the best? 1, 2, or 3, or 1, 2, and 3, or one or the other? All of them, yeah. Thanks. Thanks, Benny, Jeremy, Shane, great. All of them. Yep. I've been in the same boat, guys. All right. But this is now going to be time to change. All right. I'm a normal guy, been trading all my life pretty much. But finally, a few years ago, I was able to trade for a living and get out of the rat race. And so there's me and my wife in Puerto Rico. That's where we live. I'm in Florida today. Doing some stuff. 4 of 5 of my kids in the middle there, and that's my parents. And that was for one of my graduations. So again, just a normal guy living a normal life and doing exactly what I want to do in life. All right. So I want you to take a moment and imagine what it would feel like. Okay, if most of your trades were winners month after month, and it would be confirmed by watching that account grow. Okay, so imagine that today. Think about it, all right, because that's really what you want. Becoming the trader that no longer takes large losses, but consistently trades according to a proven trade plan. time, allowing you to grow your account month over month. Okay, that's the goal here today, guys. And I want you to think about having that life and doing these trades like this consistently every month, month after month. Okay. All right, this was my 2019 trade performance. I haven't updated it for 2020. Sorry about that. I'll get that to you guys. I should have updated this. Sorry about that. Okay, so let's go on. Let's talk about SPX credit spreads. Credit spread is a combination of two puts or two calls where the put or call in, that is sold is more expensive than the put or call that is bought. Okay, I just want to cover the basics here so that we're all on the same page. All right. Credit spread, you receive a credit when you put on the trade. Okay, so this is an example of a vertical credit spread, and you receive a 45-cent premium. You multiply that by 100 for each contract. Okay, so each contract would be $45. 10 contracts would be $450. So you receive a $450 credit into your account when you put on this trade, right? And this is selling a 30-10 put, buying a 30-05 put. Okay, and that's how you calculate that, right? Okay, so this is considered a high probability trade, and the reason for that is because you don't have to be exactly right about the market direction, and option premium deterioration works in your favor. Okay, and there's several ways that the premium deteriorates so that you can close the trade. So you sell to open the trade, and then you buy to close the trade at the end. All right. So let's discuss risk reward. Okay, that's very important. So this particular trade is probably the poorest risk reward you can have. Okay, but you gain in terms of high probability. All right. So, so the risk reward in this particular trade that I shared here is $5,000 at risk. That's the max you can lose, and you gain $450 by the credit. So you subtract 450 by 500, and that's your max loss. Okay, on this trade. A lot of people don't like it because of that fact, right? It's also your margin requirement. So high probability means is that these trades are, highly successful, and typically they're over 80% probability that you're going to win on these trades, right? All right. So let's talk about time decay, okay? Because that's really the heart of this type of trade. So this is an example of call premiums and how they deteriorate over time. So from 68 to 33 days, the rate of decay is 34%. From 33 to 5 days, the rate of decay is 57%. And from 5 days to expiration, the rate of decay is 100%. So the greatest amount of decay happens in the last 5 days. And I can attest to this because I trade 7 DTE quite a bit. And that premium just dies, within a few days. So normally I'll put on a 7 to 5 day DTE, and usually I'll close it after the second or third day. All right. Remember, keep your questions till the end, and I'll answer them. Okay. I'm sorry, but we need to get through this. Okay. Profitability factors. All right. The first one is implied volatility. I will answer it at the end. The ideal setup in the market volatility is when the volatility is moving lower while in a trade. Okay, so placing the trade with higher volatility is important so that you collect the premium with lower volatility. Right. Another profitability factor is theta, and that's really the decay in the options value. Okay, so so the Greeks measure, theta is the Greek that measures the rate of decay for the decay of the option, right? And then market direction is the third. So a trending away from your position will cause a premium price to drop. And if you enter the trade and the market moves against you in the direction of the credit spread, you'll see the premium price increase significantly. But as long as it stays within that range, you'll be fine. Okay. And we'll talk about, entry and exit factors and how we manage those going forward. Right. So first I want to talk about, a little bit about risk management, which is very, very important. Number one, always trade with a trade plan. I have trade plans for every single one of my trades. Determine max loss and reward, so you know where, how big you need to trade. And I can tell you that based on my account, I trade pretty small. Okay, to make sure that emotions don't counter what I'm doing, and that I don't take large losses. Right. Trade no more than 20% of your credit margin in of trading capital. You do not want to take more than a 2% loss, and some traders, limit that to 1%. Okay. So in a highly trending market, position trades to follow trend. I'm doing that a lot more lately. Right. So never hold short-term credit spreads overnight. And when I say short-term, I don't like to do 1 DTE or 2 DTE. That's very, very short term, and you don't want to get caught in a position that you've held and it's 0 DTE. I hardly ever do that when I'm trading a little bit longer dated options. Obviously, with 0 DTE, they expire on the same day. Okay, and then size your trades to ensure emotions. And I mentioned this, and this is really important. Emotions are not part of the decision-making process. Once that happens, your trade plan's out the window. Okay, and so you always want to make sure that your position size is in check, so that you don't make costly mistakes with your emotions. All right, so I review areas of support and resistance before my trading day, and I use fibs, and I use different different areas that we'll talk about when I'm managing or looking at support and resistance. I like to look at the US dollar. These are longer term. The Treasury notes, because Treasuries compete with stocks and indexes for capital. And so right now, there's no place to go but the market, because rates are so low. And I review futures, right? ES on trending direction. This gives me some kind of view based on the overnight trading and what's happening. A lot of times it reverses. And so I'm very aware of that when I'm placing trades. I watch the VIX level, because that gives you the volatility, and then implied volatility is a little bit different, but it's pretty much the same as the VIX. And so you want to understand where your volatility is, right? So the lower the volatility, the closer to the market your positions are going to have to be. And then determine the credit spreads positions before, and I save them and toss. And this is for 0 DTE. All right. Okay. Post-market return or routine. I determine if rules were broken and why. Very important, especially if I break a rule and I make a gain on it. And the reason for that is because what happens is you do that over a period of time and you become complacent, and then you take a big loss, and that's what you want to avoid. So you want to determine too if your losses were in acceptable ranges. All right. So if you're always going to have losses, you just want to make sure that they're in accordance with your trade plan, and that you don't take too big of a loss. All right. And always determine whether tweaks or adjustments are necessary in your trade plan. I probably adjust my trade plan once every 3 or 4 months, and it's only because market conditions change or I learn something new that I haven't learned before, and so I'm always constantly looking at my trade plan and making sure it's up to date. Okay, very important. Update trade journal with findings. I keep a personal trade journal, based on my performance, and so it's important to do that so you understand where you're going, how you're getting there, and what changes you might need to make. All right, so let's get into the actual strategies. And so this is 0 DTE. 0 DTE is a trade, right, that expires on the same day. So before we talk about 0 DTE, just a quick note on pattern day trader rules, right? So if your account is under $25,000, you're going to fall into an area of restriction if you do too many day trades, all right? And so what is that? It's the buying. What is a day trade? A buying or selling, buying and selling, or selling and buying the same security in the same day that it initiates, right? And you do this 4 times or more in a 5-day consecutive period. So you don't want to get into a situation where you're trading too much, too many day trades, because they will restrict you. And the most severe punishment is basically that they restrict your account for 3 months, and you're only able to sell your positions. All right. A lot of brokers will give you some passes once you break the rule once, and it resets your clock back to 3. But the best way to do it, especially for 0 ODTE, trade Monday, Wednesday, and Friday. That's it. And if you're closing your position one side, right, you're only gonna take up one day trade, and that way you'll stay within the restriction level. Okay. So to avoid it, one way I just told you is trade that way. Limit your trades to 1 trade 3 days a week. Manage trades from multiple accounts. So if you have multiple accounts, you trade in one account one day, one account the other, and that way it'll prolong your the amount of day trades that you take. If you trade wide iron condors, it's another way, and allow them to expire. I'm doing that more and more, and I only let them expire when it's really far from the market. Otherwise, I'll take the trade and close it. Okay. And then if you're trading ES futures spreads, there's actually options on futures, and there's no PDT restrictions on those contracts. So these are ways to avoid that rule. Okay. All right. So let's talk about entry, exit, and stop loss for 0 DTE. So I always enter within 5 to 10 minutes of the market open. We're doing some trades at the end of the day, just based on sigma ranges. I trade with another trader, and he has all these tools, and I have done this before, and it's a little riskier, but it does work. And so using a 5 wide spread requires a better understanding of market direction. Okay, so that's really the shortest, or the smallest amount of spread that you can have. I'm trading 10 wide regularly, but I know people who do 50 wide. I know people who do 15 or 20 wide. And what it does is it allows you to take your trade further from the market when you're placing those. Okay, so it's not to collect more premium, but basically to collect more distance so that you reduce your risk. All right. I do collect a premium between 35 to 70. Normally it's around 45 to 55 is where I collect. That's kind of the sweet spot. Okay. Take profit 20 for range bound market and 10 for trending market. And again, especially if you're trading one side and we have a good distance between them, I've let those expire, and but you have to be cognizant that towards the end of the day, okay, markets tend to become much more volatile, and I have seen positions where the market will move in one direction and take your profit away completely. Okay, so the safe thing to do is close your trade. In an expiration for 15 wide spread, or getting or getting the direction right on that. Okay, and that way you can just let it expire. Okay, so stop loss if the market moves immediately against you, and I'm talking about aggressively moves, because typically the market will move during the first half hour of trading, and as long as it doesn't affect the distance of your position, or it stays in that range, you should be fine. Okay, but if it really moves and it's trending in one direction very, very strongly, it's not worth holding on. Get out of that trade. Identify breaks of support and resistance, and I use a 5-minute closed candle rule. Okay, so let's talk about a couple of 0 DTE trades that I've done in the past. So this was a call spread that I put on, and I put it on right at the opening of the market. Okay, and you can see here that the market did move against me. All right, but it stopped right in this area here. All right, and from the previous or overnight trade in futures, and I do use futures when I trade just because it flows a lot better, and I can see it from the night before. Okay, and it's just a few points away from the SPX. So in this particular trade, it did go against me, but it stopped there. There was an area of resistance there, and you can see it. It's here. It's also here. Okay, so this is an area of resistance. I knew, but I was ready to pull the trigger to close the trade, but it did go down, and basically I was able to get out of the trade at 10 cents. But after that, okay, you can see here where the market went up, and this got very, very close to the SPX high. It got 5 points away, and then it dropped. Right, but you would have been sweating bullets if you would have been holding this thing. And so this does happen from time to time, and so you want to manage your risk. Again, it's better to close out your trade and move on. Okay, here's another trade. Call position here, 2885, 2890, and these red levels here are IBL or IB ranges. Okay, and I'm going to talk about that in a little bit later on in the session, especially about futures. In this particular trade here, we had divergence. Okay, so you see the market going up, you see the RSI going down. This is just another indicator that I use, right? So it did go against me, but I looked at, let me go back here. I looked at divergence, right? And after that point, as long as it didn't keep going up, I was okay, and I let the trade expire here. All right. Okay. Let's talk about another trade here. Okay. And so this was the this is actually the position on the SPX of that other trade. Okay. All right. Okay. So what happened was it was a higher or a lower high. Okay. And that's what made me stay into that trade. Right. Okay. And we'll talk about this in detail when we're talking about futures in a few minutes here. All right, so let's talk about 7DTE. 7DTE is really, in terms of credit spreads, the sweet spot. I mean, it is probably the best trade to trade for credit spreads that I've traded, okay? And so to enter, and this is very, very close to what I do for monthlies, right? So I trade with small positions using multiple expirations, okay? And what happens is that it spreads out the risk, right, over a period of time. And so the entry, I try to look for spikes in volatility to get in, and spikes in volatility to get in, and then to wait for that volatility to subside or decay to happen. There's a lot of things working in your favor when you're trading these. They just go away. In fact, I have a position now, that I put on 2 days ago for 65, and the premium today is 15 cents. So, and I have an order to close it at 10 cents. So after 2 days or 3 days, you can see where there's a significant amount of decay. And even if the trade goes against you, it's so far away, you know, from the market that that it still works very, very well over and over again. Okay, so I do use a 10 to 12 delta for bull spreads and a 7 to 10 delta for bear spreads. I can tell you that I rarely now put on bear spreads, you know, especially in a market like this. So and the fact is that with bull spreads, the distance from the market is a lot more than what it would be for call spreads. And that's why I use them a lot more regularly. Okay. Profit 50 to 80%. I normally take about 80%. I usually close these, like I said, at 10 cents or 15 cents at times. And then if you rolled a position or adjusted it, you're always going to be, your delta for those are always going to be higher because you're trying to save premium. And I can tell you that that I don't look at that anymore. If I need to roll it, I'll spread it out. I'll take a little bit of the loss and move on. Okay, it's just better that way. Okay, so in this particular type of market, around 20 VIX, 20 points is threatened. Lately I've been going a little bit further. I wait till about 30 to 40 points, not 20, to roll a position. Okay, but once we get below 20 on the VIX, you're going to see where these, the positions that you put on are a lot closer to the market, and you're just going to have to get used to those kind of market conditions. When we have the big sell-off in March, I was placing positions 200 points, even 7-day, about 250 points away from the market, and 0 DTE about over 100 points away from the market, and that was just typical during that period of time. So volatility has a huge amount of say in how you manage these positions. Okay, all right. I don't typically take losses. I've taken one loss on a 7 DTE, and it was a call spread. I've taken one loss since April, and out of about 50 trades, and that was really my only loss on 7 DTE. It's a phenomenal trade. Okay, so this is an adjustment process, and this is an actual one that I used, and it's important that you understand how to roll a position and manage it, okay, before you get into these trades, and just understand what you need to do. And so this was an iron condor that I put on. The call spread was for 40 cents. The put spread was for 45. The position moved against me the next day, and so I did roll it, and it cost me 35 cents to roll on the call spread, but I gained a 30-cent premium moving it up on the bull spread. Okay, so all in all, I didn't have to adjust the position after that, and just looking back, I collected 85-cent premium. It cost me 5 cents to roll, and I closed the trade for 60-cent profit. This is a very, very typical scenario, and it worked well, especially when I'm trading iron condors. Okay. All right. So I wanted to share with you, and I collected these trades for April, but I can tell you that every single month after April, I had 0 losses, and most of the time I am placing call spreads. I mean put spreads, so which are bull spreads. Okay. All right. So these are actual trades that I put on. You can see here I put on a put spread 50 cents and closed it out 2 days later for 5 cents. The next trade I put on was a call spread 55 cents, and then I closed the trade I put on the 2610 2605 for 5 cents. Okay. The next trade I put on was a put spread for 50 cents. Market went up. I closed it at 15 cents. So got rid of that trade. Next trade, and you can see the premium at the bottom, right? So the next trade, I had to roll the position. It cost me 15 cents to roll, and then I put on an additional position for 55 cents. After that, I put on another position for 50 cents. Bought to close the position that I had previously put on here, and then after that, I put on another position on 422 and closed two positions on that day on the 23rd. Okay. Sold another spread on the 24th and closed the position for 50 cents gain on that one. And then I can tell you that the one I put on for May also closed for 10 or 5 cents. I couldn't remember. But you can see here that I collected $2.55 of premium for the month of April. And trading this way it's a pretty typical scenario. But after that, the market has been roaring higher. And so I've been limiting myself to only put spreads and no stress trade. And they've all, closed very, very profitably. Okay. All right. Monthly trade strategy. I'm going to run through this. It's very similar to the 7 DTE. Okay. Same type of scenario as far as using the delta. I take profits exactly the same way as 7 DTE, and I roll these positions. And in this case, 2.5 to 1.5%. When volatility goes above 20, I increase that. Above 30 or 40, I increase it a lot more. And so I'll use 5 to 7% to trigger a roll on these positions. Okay, and so I do not let them get threatened. Okay, exit stop loss is basically rolling the position or adjusting them. Okay, all right. So this is a real scenario. Here's a trade that that I had put on, and you can see here that the distance is much further than on the put side than the call side, and then the position got threatened, and so I did make the adjustment on the trade. The first thing I did was buy the non-threatened position for 5 cents, got out of that trade, and then I basically rolled the put spread for a debit of 0, okay, on that into January, and then I put on the call side for 50 cents for a credit, total credit of 45 cents, and so that was basically the adjusted credit on this particular trade, okay. And the premium that I collected at expiration was $1.15. So it actually allowed me to collect additional premium for this trade using the rolling into the next month. Okay, it gave me time and distance. Right. Sometimes I'll roll within the same month, but it's rare. Okay, so so this is basically the ending position, and I was able to close these trades for either 5 or 10 cents. I can't remember, but it was a nice profit. Okay, so I'm going to talk a little bit about technical analysis. I want you to remember this fib here because I'm going to talk about it in futures as well. Okay, and these ranges. Okay, so fibs work really well. This is the IB range, and I'll talk about the IB range in futures in infinitum so that you have that. But this was a trade that I put on. It was a call spread, and you can see here what happened was it went up to this level here, the 786 fib level. Okay, when you draw this fib from high to low, all right, and it stayed there. The 5-minute candle blew through, that area of support. I waited, let it come down. If it would have closed above this level, I would have closed the trade, because normally once it passes the 786 area, it typically takes out the high. Okay, and again, I'll talk about that in a little bit more in futures. But I hung in there and let the trade expire. Okay. Okay, another thing I wanted to mention is divergence. In this case, I was using MACD. Okay. And so you can see here, as the market was going up, momentum was going down. Okay, and that was another factor that was telling me that the market may be losing momentum and may just close sideways or down, and that's exactly what it did. But in some cases, it goes against you. This doesn't work, and you need to pull the trigger. All right, I'm going to talk a little bit about support and resistance and how I use them. You can use them both in trend lines and price. Price is really the strongest factor for support and resistance. Okay, trend lines get to be tend to be broken, and they're regularly broken, and they're just weak areas of support and resistance. Okay, so what happens? You have a market that that respects the support area. Once it breaks, that area becomes resistance. All right, and so it goes through, and this is a very, very simplified version, but take this with you, because it's one of the strongest disciplines that you can use in terms of trading, is support and resistance areas. So if you can really learn this, and where to identify support and resistance areas, you'll become a much better trader. And it takes time. It takes time and experience. I mean, I look at charts every single day. This is what I do. And so I can recognize them very, very quickly. It takes a little bit of time, but once you start doing it, it becomes second nature to you. Okay. All right. Let's move on here. Okay. Now let's talk about futures. Futures, I have been testing. I've traded futures in the past, not real good consistency. Made losses, but for 2020, I really made it a point to perfect my futures trading, and I trade only two, MES and MNQ, and so these are great vehicles to trade with. Okay, so let's talk about the basics first, and this is according to TOS. The commissions in TOS are higher than other brokers that you can find, for futures, but I use TOS because it's integrated with the signal service that I have, and I can help a lot of other traders trading these by doing that. Okay, and so but if you're not stuck with that, AMP, Ninja, there's a lot of futures houses out there, futures brokers, that their commissions are much lower, and the margin requirement is also much lower. Okay, rather than using Thinkorswim. All right, so let's move on. I trade MES and MNQ. MES are the micro futures for S&P 500. The contract multiplier is $5, which means every point on the S&P 500 is $5 on per point, okay, that you make per contract. All right, minimum tick is 25, so 25, it's 1/4 of that, and so the tick value is 1.25. All right, and there's 4 ticks in a point on an S&P 500. The Thinkorswim margin requirement is $693 for it, and it's very low for what you can make on these. All right, and I do have my performance in with commissions and fees, and I've shared that with in the group. And if you don't have it, just let me know, and I can shoot it to you. Okay. Oops, sorry. NASDAQ futures are more volatile. You'll make much more money on it, but your stops can't be the same because it's much more difficult to manage. So the contract multiplier for NASDAQ futures are $2, and the tick is the same, 25 cents. Dollar value per tick is 50 cents, much less, but MNQ moves much faster, much more aggressively than MES. So if you're going to start with MES, okay, and then after you develop consistency, you will be able to manage the MNQ futures much better. Okay. So let's talk about, and I have several slides here to share with you, and these are really, really important. Okay, so the first thing I'm going to talk about is initial balance. All right, initial balance means the high and low level of the start of trading for 1 hour is determines the the initial balance range. Okay, so in this case, it was just around 33.58 and just above 33.68, probably around 33.69. Okay, and this was Friday. Okay, so I took this from Friday, so it's very, very relevant. Okay, and you can see here that this is MES, so these are the S&P 500 futures. Okay, and the first level that it hit was this high level. And you can see here, after it hit the initial, this initial level high, the next candle here kind of just went up to this level and stopped and then started going down. So you can see here that this is now developing into an area of resistance. Okay, this area right here. So here it went up here, it stopped again, went down. Oops, let me go back. It went down and then it broke, and you can see that basically it was a false break. Now this is a 1 minute chart. Okay, so a lot of things happen in 1 minute, but in this case it went up and broke, and a lot of traders use these levels to trade off of. Okay, and so technically in this case you could have, because it was a false breakout, you could have shorted this and taken the position, especially if you're a scalper. I'm not a scalper. But I want to share with you, how to trade these in short-term fashion, okay? Because I did become proficient trading these short-term as well, all right? But I do like swing trading futures. All right, and so that's the first lesson on initial balance. And so I actually have a study within Thinkorswim that paints the high and low level of the IBL. As I'm trading. Okay. All right. So that's that. So that's the initial balance. Very commonly used. Okay. So this is initial balance trade. Now this is the same chart, only in 5 minute. Okay. Here's the 1 minute chart, and here's the 5 minute chart. Right. Now you can see here, after it broke, right, it went down. You can see that how it went down. Okay. It went right back up. And it broke, and now what happened was that the IBL high, the IB high basically was now a support area. It broke here, but it went right back up, and so it stayed here for several hours. You can see this, that it stayed here for several hours. It tried to break above, and this is the day that we were trying to break the all-time high. Okay, and so it went up, and then it went back down. And so now, technically, you could use this as a short here. In a 5 minute chart, right? Typically follows through more, in better fashion than a 1 minute. All right, and I use both. I actually use the 1 minute, 5 minute, and the hourly chart. And so this would have been a very nice trade going down. Okay, and you can see this, that it went from the IBL, from the IB high to the IBL to the IB low. It passed through that, but it bounced right back up through it. Okay, and so this was the range basically of that day. And so you can see here where you can leverage these ranges to trade these futures. Okay, but there's a lot more to it than that. All right, so let's move on here. All right, so this is the same. This is the same chart for MNQ, the same time frame, I'm going to say. So now this was the 1 minute, and this was the 1 minute for MNQ, right? And you can see the trend was clearly down that day, opposed to the MES, right, which was pretty much bullish, right, until towards the end of the day where we get more volatility. Okay, so going back to MNQ, all right, and I wanted to use the MNQ because it was a good example of what really happens day in, day out in the market. Okay, and what you want to do as a trader. Okay, let me give it to you in my personal view. Okay, my personal view in the market generally goes up. Okay, and so I short very infrequently. I am almost always long. okay? Because I want to be with the general trend. I want to be with the larger trend that the market gives me, okay? And so what I tend to do is I try to find a bottom, okay? Looking for a top is not the same. Finding a top is much more difficult than finding a bottom. And I haven't really studied this, a lot, but I think it's because the trend is generally higher, okay? It goes higher. And so when I'm trying to find a bottom here, what you want to do is you want to identify the bottom in this particular area, right? And you want to let it test, okay? You need to let it test generally before you put on a trade. And so almost always, probably 95% of the time, you'll get a bottom and you'll get a test, all right? Very infrequently will you not get a test. And so I almost always wait for that test. And so what happened here? We got the test, but it failed because it went through the bottom, all right, of the previous pivot here, okay? And so no, not ready to put on a position yet, right? So it went up from here, right? Okay, I'm waiting for that test. And again, we got a bottom, but then we got a test too, right? And what happened? It went through the bottom, so it failed. Okay. Now we got another bottom here. And what happened again? It went through the test and it failed, right? But what happened after that? we got an area right here, okay? And it's funny because it happened right on the IB level, right? The bottom of the IB level, right? And so you don't think traders are using this? They're using this, all right? And so we got to the bottom of this IB level, and here, this is a reversal pattern forming, right? Because this is a test. This actually is a test, okay? But what happened was there was a test and there was a reversal. And the test was, and sometimes it may go through it a little bit, okay? Maybe 1 or 2 ticks, but not by a lot, by what this did, okay? And so then from that point on, this was an identifiable reversal. And so at any timing here, it would be a good place to get long, right? So let's go to the next slide. Now this is this is another confirmation of a reversal. All right, I use the RSI and I've had it on all my charts, okay? And so what happened here? We had a downtrend, and I mentioned this with the MACD, right? We had a downtrend, but on the RSI, we had an uptrend. And so what was happening is that there was a loss of momentum during this period of time where RSI didn't bottom out like it did here, but it stayed above the previous low, right? Even though the market went lower. And so this is kind of a confirmation that it's losing momentum, the sellers are going away, and then buyers are starting to come in. And that's what happens, all right? So I wanted to share this, and this is called divergence. When you have a trending down and RSI trending up, there's a divergence. And it's very important to understand that and recognize that, at least for me, because this is what I use in my trading. All right, so this is the 5-minute. Now, this is the 5-minute chart, okay, on the MNQ. So this whole area right here is what we were looking at. This was the reversal area right here in the 1 minute, okay? I have both charts. I look at both charts at the same time when I'm trading these. And so what happens? We got higher lows, okay? And we also got higher highs, right? And so technically, you want to put on this trade around this area, right, where it tested, and you want to get out in an area where where you trade, you're confident that it's not going to keep going up, right? Very difficult to do. I'm looking at the chart now, right? But when you don't have this right here to look at, you don't know. You don't know what's going to happen. You have no idea what's going to happen, right? So, and so the best way to trade this without having a target is to let it basically go down and hit a lower low, which would have been around here, right? And then get out at this level. But what would you have made? Here, maybe you got in at 11, 110, and here you would have gotten out at 11, 111.20 or 111.30, right? Around there. Actually, 111.40, let's say, just above 40. So that would have been like a 20-point return. It's a good scalp, right? This is what scalpers do. 20-point return, boom, but you better have low commissions. And you better be able to trade a little bit bigger because that's not a lot. But if you do this over and over again and you become proficient at it, you'll become very good at it. And I know some very good traders that do this, all right? Now, another way to take profit, okay, and this was a lower high there, okay, is using a Fib retracement, okay? So you saw the Fib retracement in the tech part, right, where I shared, okay? And so when I get a low, when we determine we got a low here, right? And this typically happens between 9:30 and 11 o'clock in the day. We'll get a retrace, and it'll define the range of the day pretty much, okay? And so this was the area that you jumped in, right? Now, these Fib levels are very, very important because typically in a retrace, the market will go back to the 618. Very, very common, unless we're in a downtrend. If we're in a downtrend, the market will go up to the 23.6 area right here, right? It'll go up and down and break, okay? Or the 38.2, right? Once it breaks the 50 level, you got, very confirmed reversal, right? And so in this case, what you want to do is you'll want to target, anywhere between the 618 and the 786, right, to get out. Now, for this trade, if you had a target set based on your fibs, what I would have done is I would have taken the trade here and would have gotten out around this level because you see the momentum losing. 618 is typically the high where you want, the high probability that it's going to get to the 618. So you want to take your profit here. In that case, I would have taken profit around the 70 level, which was, way higher, double the amount that I would have made in the scalp that I mentioned earlier. So using targets, using fibs with targets is a much better way to trade these than just relying on a lower low to get out of, okay? So that's just another way to trade this, all right? Now, I'm going to share with you what I do mostly, okay? And I'm a swing trader for futures, and that's really what I enjoy doing, okay? So anyway, here's the same chart, same MNQ chart for the minute chart all the way through the day, okay? And again, I use this chart. I'm sharing this chart because I use both the 5-minute and the 1-minute on these trades, right? And so you can see clearly here, it's a lot more choppy, but you can see here, the levels in a finer detail on the 1 minute. All right. So I'm going to share with you what I normally use the hourly chart, for my futures trades. And the reason I do that is because I don't like to give Thinkorswim my commission fees. All right. I can hold on to a trade for several days. And again, I only do this for my swing trades, and I use small positions. I use 1 to 2 contracts. Okay, and I can have a trade go against me. I've had it go against me, several hundred points, on MNQ, and I just stay in it because I know that the overall movement of the market is up. Okay, Now you may want to have like catastrophic stops where, where you don't want to lose everything, right? And in one of those events, like happened in March, where the market went down 20%, okay, or 30%. So you want to have catastrophic stops, but I generally, that's what I generally use, and I let this thing ride, because eventually I know it's gonna come back. And I can tell you today, I'm in right now. I'm in the MES trade, and I'm going to explain how I use the Fib extension on this. All right. Okay. So this is what's called an ABCD pattern, right? And instead of using the Fib Retracement tool, you use the Fib Extension tool, right? So okay, we've got very little time, so I need to get going. So so what I did was, this is the A, the extension. I'll explain that in a second. So this is A, B, C, all right? And so you take the extension tool, you run it up this way, down this way, and you want to make sure that it doesn't, it's not below A. C has to be above A, right? And then the D is where you think the market is going to, right? And right now I'm in this trade, and I'm planning to get out around the 100 level. And so around 34.13, okay? So I'm in this trade now, and I was in this trade yesterday, and I got a nice gain on this, and I decided, because I wasn't sure whether we were going to break the highs, but once we went above this level here, the 90 level, which it did this morning, I got in just because I know that once we break the 618, we're going to go higher, okay? And that's a probability that I use, and it generally works out, okay? So I'm in this trade. I have 2 contracts, and you'll remember this one, right? Because by the end of the week or next week, you'll know whether this thing worked or it didn't work, okay? But normally I will take my limit here, take it out, or if it goes above it, I may use a trailing stop and let it go to the 125. Okay, and I have different levels for trailing stops that I use as well. All right, so that covers basically, in a nutshell, the futures trades. And so what I want to get into now, and again, stay with me here, right? Because this is really important and may change your life, in your trading. All right. So the question is, would you want to follow my trades while you learn the 4 strategies that I've outlined today, right? And be consistently profitable, right? We talked about the reasons that you're here, and I want to support you 100%, okay, in what you do and what you're trying to do, because I know the journey that I had to take to get to where I am, right? And so what does it take to break those barriers, okay? The question is, are you going to keep hoping that something is going to stick, or are you going to finally take the steps to take that plan, right? Get it together and make things work. Success is learning, training, instruction, practice, and practice, but it's not only that. It's discipline, it's commitment, it's having an edge or multiple edges, and never wanting to quit, never quitting this process. Because I had ample time to quit, several times where I had large losses. And I said, nope, I am going to conquer this thing, okay? And if I do it, and if I did it, I am telling you, you guys can do it too. What you want is success, right? And so what I have is a real-time trade alert signal group, right? That I use, and it helps me as a trader, and it helps everyone that joins as a trader as well, okay? And I'm telling you, it's very different than any signal service that I've used, and I've used several, and I wanted to make it different. So we have multiple strategies that we use, and we have different chat groups, one for subscribers and one, the main one that me and one other trader use, and we've both been at this for many years, okay, and we are consistently profitable. in not only non-directional trades, which are the credit spreads that we use, but also directional trades such as futures and debit spreads. And I do trade options on different stocks as well. Okay, and those are successful as well. Okay, so this is an example of the trade alerts that come in. Again, they're integrated with my plan, right? With my account, and so my trades that I place immediately show up in the room, and I have different rooms, right? 0 DTE, 7 DTE, monthly, the spec trade, and I also have the futures trades, all right, that I use. And so so these are channels that this is Ike's channel. This is the other trader that I use. He's very, very proficient. He actually uses other signals in other groups as part of his trading setup, and it works very, very well. Okay, these are success stories. I'm not gonna read them all, but you can go back in the in the group and you can read these. Right, these guys have basically the group changed their trading, and they've done very, very well after that. Okay. Now, you're going to ask me the cost, okay? So the cost of this normally is $59, $99, and $129. So because you attended the webinar, right, and we usually have a special price for people on the wait list, I'm giving you the same price as those for the wait list folks, okay? So it's $39, $79, and $109, right? If you get in the next couple days, take your time, think about it, right? But here's my guarantee. If you subscribe for 1 month and you lose money by following my trades, I'll refund you the subscription price plus 25%. Okay. And guess what? I've been at this for 2 years. I've never had anyone ask me for a refund because they couldn't, they couldn't because they make money every single month that they get in. Okay. In addition to that, I have, an SPX course that I have. This covers everything that I covered today and a lot more to make you very, very proficient in what you do in your trading. Okay. So, it's actually not $107. It's actually $97 for the course. Right. So the question is this for you? Right. Do you want to learn a step-by-step process to gain income in a market that goes up and down? Do you want to finally break the barriers that cause losses, and do you want to become a trader that makes consistent income? This is for you if that's what you want to do. A lot of people come in 1 month, they stick around, they learn, and they leave. And that's perfectly fine. But I can tell you that there are people that are with me that have been with me for a couple of years already. Okay. Again, it's my guarantee, and you'll get access to $20 off subscribing today, $20 off for life for the actually it's more than that for the course because it's $149 and we're doing it for $97 now. We have professional traders, myself and another guy that trades for a living. We have a training and education channel that we put ad hoc training in there as well. And the signals are automated for me, not for Ike, but for me. They're automated. And so they come in immediately when I put in the trade. And so you get a fill price, a predetermined fill price, target price after fill, and then my guarantee as well, right? And the good thing about it is that you're going to win, right? All right. So here's the offer, and I'm going to share that with you. Okay. And everything here is in there, and the link to access the site is also in here. Okay, it's open now. We open only 4 times a year to new subscribers, just because it takes a lot of time to answer all the questions, and we want to do that at one time to gain, to have everyone understand what's going on in the room when they get in there. that way we can really focus on our traders and what they're doing and making sure that they're making money. And that's really our goal. Okay. So any questions that you have that I didn't cover here? Let me see if I have questions here. So if you have questions, please send them out now and I'll answer them for you. Okay. While we wait here. Okay, let me take it to the next slide. Okay. All right, from Sid. SPX credit spread, how do you determine the width of the spread and how far from the underlying and volatility concerns? I can tell you, Sid, from my experience, a 10 wide works really well. The wider the spread, the less that you're going to basically the further away from the market that you're going to be, and less risk. Okay, because I use the same premium. You can increase the premium if you go wider, but my recommendation is basically lower the delta so that you have less risk of it being breached. Okay. Okay, so I'm going to go through here real quick. Okay, the link for the page, the web page, is in the offer. So look at the offer, and you should be able to click on it right there. Okay. What returns are you obtaining with this strategy? For 0 DTE, it's about a 15% return on my capital per week. Monthly, it's less than that. It's 5 to 15%. For 7 DTE, it's actually around 20% capital per of the capital used per month. Okay, now that's not account size; it's the capital used. All right. Yes, you can buy the course first, and yes, you can join the service at a discounted price. Okay. We're closing the cart here for new subscribers on the 28th. Okay, the 28th of the 28th of the month, and so that should give you time to go through the course and be prepared to trade. We have a private Facebook group. You can reach out to me at any time if you have questions there, or you can email me, or you can message me, and I answer everyone's questions as they come in. All right. Implied indicator. Yeah. Well, you can get the. Oh, you're talking about the IBL indicator in TOS. The implied volatility is already in TOS, and yes, I can send you the the IB range indicator. I have that, and I can send that to you. Okay. How many contracts do you typically sell doing 0 DTE? Right now, I'm selling 2 10 wide contracts at this time. But there are folks in the group that trade much bigger than me on that. Okay. Can you please explain more? Do you trade more than 20% credit margin? Okay. So 20%, 20% of my account, in terms of the amount of capital I use for putting on these trades. Okay. So if I have let's say a $10,000 account, I'll limit my the amount that I use to if I have a $10,000 account, I'll limit it to $2,000, right? That's 20% of the account. So that's basically what I use to trade. I already have the course. It is $39 for swing trading. I'm not sure about that. The course is $97 right now, Nathan. There is a $39. Yes, there is a $39 subscription that you can sign up for, and that includes the monthly trade only. Okay, $20 off. Okay, Sid. Normally the plans are $20 higher than they're costing right now. So by the end of the 28th, the plans move up $20 in price. Okay, so you can get that for $20 discount right now if you join by the 28th. Does the SPX course include implied? Okay, the indicator that I talked about, Shane, I think I mentioned that already. Where can I? The link for swing trading. Okay, so guys, you have to go into from the website. It's going to take you to instructions for downloading Telegram. Okay, and then you sign up in Telegram. Okay, it's not actually off the website. So once you click on the link, it's going to give you very detailed instructions for how you sign up within Telegram. Okay. Okay. The swing trader program for 70TE. No, the swing trader is for 70TE and 30DTE. Let me think. Swing trader, day trader. No, swing trader is only for 30DTE. Sorry, Nathan. Yep. The futures trades are in the highest plan. They're in the day trader plan. Okay. The link to the course, I think. Okay, yeah, Stephen's answering the questions here. All right, great. Any other questions? I'm going to stick around here for you guys in case you're trying to join now. I can walk you through it. So let me know. I'm not really using futures to hedge, but you certainly can, especially for call spreads if you're long. But I'm generally not trading futures, but I'm almost always in a futures trade now. So I'm very, very active trading futures. Obviously, I trade 0DTE 3 times a week and 7DTEs 2 to 3 times a week as well. You can upgrade or downgrade at any time you want once you're in, okay, for the same discounted price. The link, let's see, Stephen just shared the link. Okay, there we go. There's a link. Any other questions? What day do I normally put on 70TE? I put them on any day, but what I don't like to do is let them expire on Mondays. So I'll avoid Monday expirations. And the reason for that is because I don't like coming into a weekend where I have 3 days to get rid of a trade, and on the Monday it's a 0DTE, and I don't like closing trades, 70TE trades on the day of expiration. Wow, good question, Sang here. With a 10K account, you definitely want to be trading only one contract in futures, either MNQ or MES, and I would also be trading no more than one contract 10 wide on a 10K account for the 3 strategies. SPX is not available on Robinhood. No, you need to move into a different platform, either E-Trade, Tasty Trade, or Thinkorswim, or TD Ameritrade. The recording will be sent out. I think it's going to be sent out today. I'm not completely sure, but it will be sent out. 7DTE, your question about 7DTE. What was your question saying about 7DTE? Looking up here. Oh, 10K account. Same thing. I'd be using just one contract for 7DTE. And you can even make those 5 wide as well. Okay, that's information on the replay. The replay will be sent out tomorrow. No problem, Singh. No problem, Vincent. Thank you. Again, I'll be hanging around here in case you're trying to join, and if you have any questions, just let me know. Yeah, if you have a 50K account, you'd probably be good trading 5 contracts. Yep. That's pretty safe, actually. No problem. Hey, that's great to hear. I'm glad to hear that. Yeah, I have a great relationship with Eric. He's a great guy, super guy. Yeah, and keep listening to his podcasts. They're very good. No problem, Willie. Thank you. Any other questions? Okay, if I freed up $4,000, yeah, $4,000. Yeah, what I say is $3,000 is really the minimum trade, but $4,000 you should be able to get away with that. But you can't do all the trades though. Okay, just be careful with that. Yes, with a 10K account, you can trade MNQ, not NQ. NQ is 10 times the size. MNQ. Okay, Joe, just to make sure, I want to make sure you understand that. Actually, my future trades are almost, believe it or not, set and forget. I mean, I put those on and I just wait for my profit targets, honestly. We did hit the all-time high today. Special caution going forward. Yeah, I'm getting out of, generally, to be honest with you, monthly expiration weeks are bullish. The next week is usually not. So I would take in, I've been taking profit. I took profit on my long positions yesterday and probably be closing out the rest of them this week. Okay, just because I don't feel that a huge drop is coming, but I do feel that we may get a correction, 5%, whatever, coming. Especially we're getting to that seasonal point of the year that happens. My email is al@simpleoptionstrategies.com. You can again, you have any question, I answer all my questions, all email questions that come in. At least I can do that to this date. Yes, my spreadsheet, and I'm moving everything into Google Sheets now, so they're visible from the group, and I do post them in the group, visible in the Telegram service, and I am posting them within the groups as well, and sharing those. But the trades don't go into the Google Sheet until after they're completed. The directional stock trades are in the SPEC channel, and that's in the day trader plan, the swing trader plan. I'm sorry, the day trader plan. We have the SPEC. I think it's in there, right? Are the SPEC trades in? I can't remember now. SPEC trades in. No, I think futures and SPEC trades are in the higher plan. Stock option trades, yes. Let me see what I'm in right now. I can tell you. I'm currently long. I closed my Apple trade yesterday. I had a few Apple option plays on that. I closed my Tesla trade yesterday. Let me see, spec trades. I'm currently in DRIP. It's kind of a hedge against crude. I'm in QQQ, Roku, Facebook, Plug, and Alibaba. Those are the stocks that I'm in right now, and they're all directional. They are, I have call debit spreads on those except for Plug, where I have a naked call on that one. Yeah, future and spec trades are both in the full-time trader plan. Thanks, Stephen. Any other questions? I see several people have joined already. Thanks for that. That's great news. Okay. Again, if you have any questions, the calls that I'm using, I have 2 calls on Alibaba. The rest are just one call, one contract on the debit spreads. They work. I'm pretty conservative. Yeah. I do not do flies. I have never been able to get my head around that. I know people who do iron flies, but I actually I've never put on one of those trades. I've analyzed them, but I've never actually put on one of those trades. All right, guys. I think that concludes the workshop. Again, if you have any questions, you can, for those of you who joined up, you can reach me in Telegram. I'm available. I answer all the questions. You can email me, message me, and I'll be available. All right. Thanks for your time. Again, this recording will be sent out tomorrow, and hopefully you've got some value from the workshop. And we'll see you all next time. Okay. Okay. One more question saying, do you tell how many contracts to go in? Yes, I do. Absolutely do. Any changes that I make are updated immediately. Okay. All right, guys. Thanks a lot. Have a great day.